The Republican plan to eliminate the state income tax by increasing sales taxes may sound simple until you ask how the state replaces $8.5 billion in revenue. Hi all, this is State Representative Stephanie Hein with a quick update for the week in Jefferson City. Here's what you need to know. This week, the House advanced updated versions of House Joint Resolutions 173 and 174, the Republican plan to eliminate Missouri's individual income tax by increasing sales taxes. To be fair, the newest version of the proposal is slightly improved. It adds revenue triggers that would gradually lower the income tax rate over time instead of eliminating it all at once. But here's the trade-off. To reach those triggers faster, the proposal gives lawmakers broad authority to increase sales tax rates and expand sales taxes to more goods and services that currently aren't taxed. And that matters because Missouri currently receives about $8.5 billion in general revenue each year from the individual income tax. If that revenue goes away, it has to be replaced somehow. And under this plan, the answer is higher sales taxes. Right now, Missouri state sales tax is 4.225%. Of that, 3% goes to general revenue and 1.25% is dedicated to schools, conservation, parks, and soil conservation. Local sales taxes are added on top of that. If lawmakers try to replace income tax revenue without expanding what gets taxed, the state sales tax rate would have to jump to nearly 13%. That's right, 13%. Think about that. What would that mean for communities like Springfield, where the current combined tax rate is 8.1%? Under this scenario, our sales tax rate would climb to as high as 16.8%. And remember, there are already more than 50 locations in Missouri where the total sales tax rate is 11% or higher. Think about what that could do for those communities. So instead of dramatically increasing the rate, the proposal allows for something else, taxing more transactions. That could mean expanding sales taxes to services that currently aren't taxed, like professional services or repair services, construction services, banking services, and personal services, just to name a few. The proposal could also allow sales tax on motor fuel for the first time in Missouri history. Sales taxes also tend to hit moderate to low-income families the hardest because they spend a larger share of their income on everyday necessities. And the potential impact doesn't stop there. Public schools rely heavily on state revenue supported by income taxes. According to the Missouri Budget Project, Springfield Public Schools, the largest district in the state, could lose about $27.5 million every year under this kind of tax shift. That's about $1,261 per student, roughly the equivalent of 500 teachers or 869 support staff. And when supporters of the plan refer to states like Tennessee, Texas, and Florida, they miss out on some differences. Those states rely heavily on other revenue sources that Missouri simply does not have at the same scale, like oil and gas production in Texas and much larger tourism economies in Florida and Tennessee. Without those kinds of revenue streams, Missouri would be asking Missouri families to carry far more of the load themselves. So when you hear about eliminating the income tax, it's important to ask the next question. What replaces it and who ultimately pays for it? We expect the resolution to be debated on the House floor the week of March 9th. Reach out to your representatives if you have thoughts on this issue. I'll drop a link to our member roster in the comments. Thanks for watching. Stay engaged, stay informed, and as always, reach out if you have any questions or concerns. See you soon.